Hey everyone, welcome to The Explainer. Today, we are completely shifting gears and decoding the source material on advanced audit investigations. We're leaving the standard, routine external audit in the rearview mirror and stepping straight into the high-stakes world of advanced assurance. Now, this isn't about your basic box ticking or just making sure the numbers add up. Oh no, advanced assurance requires a totally elite investigative mindset. So, you know that standard audits are all about looking for material misstatements to give reasonable assurance to shareholders, right? But what happens when you need to actively hunt down deliberate fraud? For this, I really want you to step into the role of a financial detective. Your job is no longer just to review things. Your job is to uncover exactly what other people are desperately trying to hide. Let's crack open case one, the fraud. We're talking about the forensic audit. This is where accounting literally meets the courtroom in a high-stakes hunt for financial misconduct. And there's a really stark contrast here. In a typical external audit, you rely on sample-based testing to give reasonable assurance, you report to the shareholders, and you generally assume management is neutral. Well, a forensic audit flips that entirely on its head. It's highly investigative, specifically designed to gather evidence for a court of law or for lawyers. We don't just sample, we do 100% testing on the affected areas. And honestly, the biggest psychological shift is this: we assume fraud actively exists. To pull this off, you need a seriously different toolkit. The forensic auditor's toolset looks a lot like a true criminal investigation. We rely heavily on data analytics, using mathematical principles, like Benford's law, to spot unnatural anomalies in massive data sets. We use computer forensics to recover files that someone thought they permanently deleted. We meticulously examine physical and digital documents for forgery or subtle alterations. And, crucially, we use advanced interrogation and interview techniques to extract the truth from people who might be actively lying to us. So, if you need one quick summary to lock into your memory for your exams, forensic audit equals investigating fraud for court using 100% testing, data analytics, and interviews. All right, let's move to case two, the criminal. This is all about money laundering and the Proceeds of Crime Act. Here, we step into a realm where you act as a vital shield, literally preventing organized crime from infecting the legitimate economy. First, we've got to define the enemy. Money laundering is the act of concealing the proceeds of criminal activity to make them appear completely legitimate. It's all about taking dirty money and trying to make it look clean. Criminals usually follow a pretty specific three-step playbook to wash this illicit cash. Step one is placement. And this is actually the riskiest phase for the criminal, where they physically introduce illegal cash into the financial system. Step two is layering. They use these dizzying, complex webs of wire transfers and transactions to totally obscure the original source of the money. And finally, step three is integration. The funds are returned to the regular economy, maybe through buying real estate or luxury assets, so they appear completely legitimate. Because this threat is so severe, your legal duties here are incredibly strict. You have to perform robust KYC, know your client procedures. And that means figuring out not just the corporate shell, but the ultimate beneficial ownership, like who is actually pulling the strings. If you spot something that just doesn't add up, you are required by law to file a SAR, a suspicious activity report, usually to your firm's nominated officer or directly to the National Crime Agency. And pay close attention to this. Failure to report those suspicions is actually a crime for auditors. You carry personal criminal liability if you just look the other way. But listen, there is a massive trap here, and examiners absolutely love to test this. Tipping off is a criminal offense. If you file a suspicious activity report, you absolutely cannot let the client know they're under suspicion. Doing so could alert them to destroy evidence or flee, and it will land you in some severe legal trouble. Let's cement this second case file with a powerful memory hook. Money laundering equals concealing criminal proceeds. The auditor must report suspicious activity, and remember, absolutely no tipping off. Okay, let's pivot for a second to something that feels a bit like a paradox. Think about this. How exactly do you audit something that hasn't even happened yet? Well, that brings us right to case three, the future. Prospective financial information, governed by ISAE 3400. We're opening the file on how financial sleuths analyze forward-looking data. And there's a really specific nuance you need to grasp here. Forward-looking info basically comes in two flavors. A forecast is based on expected future events and management's absolute best estimate of what is going to happen. A projection, on the other hand, is based on hypothetical assumptions. It's a what-if scenario. Knowing the difference between those two is absolutely vital when assessing management's plans. So, what exact procedures do we use to test these future predictions? I mean, we don't have a crystal ball, so we have to test the mechanics. We evaluate if management's assumptions are actually reasonable and if they align with historical performance. We rigorously test the mathematical accuracy of their calculations. We assess if the numbers are consistent with the company's overall business plan. And crucially, we must obtain written representations from management confirming their responsibility for these assumptions. Because the future is, inherently uncertain, we cannot offer the positive, reasonable assurance of a standard audit. Instead, PFI engagements only offer limited assurance. We use cautionary, negative language in a report, basically saying nothing has come to our attention that causes us to believe the assumptions do not provide a reasonable basis for the projection. Plus, we have to explicitly state that actual results are likely to be different. To summarize this future-focused investigation, keep this one-liner in mind. ISA 3400 gives limited assurance on forecasts. Your job is to test assumptions and the math, and always include cautionary language. And that brings us to our final file, Case 4, The Secret, Due Diligence. This is where you dig deep into a target company's closet right before a major deal goes down. Due diligence is a comprehensive investigation of a target company before a merger, acquisition, or significant investment. It is so essential to understand that this is an agreed-upon procedures engagement. We aren't giving a traditional audit opinion here. We are providing factual findings based on a very specific scope of investigation, all to help the buyer make a truly informed decision. Uncovering those hidden corporate secrets requires a massive, multidisciplinary scope. It's really not just about the numbers. Sure, financial due diligence looks at historical performance, assets, and hidden liabilities. But we also look at tax to find compliance exposures. We review legal, digging into contracts and any ongoing litigation. We assess operational realities, things like IT systems and supply chains. We even look at environmental factors, hunting for contingent liabilities like unrecorded pollution cleanup costs. As the financial sleuth here, you're constantly on the lookout for major red flags to protect the acquiring company from buying a total disaster. You're going to calculate normalized earnings by stripping out sneaky one-off gains management might have included just to inflate the price. You identified the true, ongoing working capital requirements. You hunt vigorously for off-balance sheet liabilities that standard audits might totally miss. And you expose related party transactions that just don't reflect true market reality. Let's lock in our final exam trigger for this case file. Due diligence equals investigating a target before an acquisition, and it spans financial, tax, legal, and operational boundaries. All right, time for the auditor's verdict. Let's wrap up these case files. We have covered some serious ground today, bringing 4 incredibly powerful investigative disciplines together. Whether you are performing 100% testing in a forensic fraud hunt, shielding the economy from money laundering through strict SAR reporting, testing the mathematical assumptions of the future under ISA 3400, or tearing through a target company's secrets in due diligence, mastering these 4 areas transforms you from a standard accountant into a high-level business protector. You've now got the mindset of a financial sleuth. The only question left is, are you ready to catch what everyone else misses? Keep this structured approach in mind, apply it to your studies, and you'll be absolutely unstoppable.